Hi, and thank you for watching us here at Tax Talk UK, where we talk about all things tax and also other important aspects and things that you need to know about if you are self-employed, running your small business, working for yourself. All jargon meaning the same thing. So today we're going to talk about CIS subcontractors and payments on account, so sole traders. Before I do, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you should need to, as well as being able to find other information that we have available on a whole host of different topics, all aimed at supporting you in your self-employment. You'll find the topics catalogued in our playlist. So if you look for the playlist that describes your individual circumstances, then that is where you will find the information that's aimed at you. So back on to subcontractors and payments on account. So a little bit of confusion on this from some subcontractors who are generally receiving a rebate each year and are asking, will they still need to make a payment on account? So a good question, and good to see people thinking ahead for the liabilities that they will be incurring to make sure that they can make provision for them. But the simple answer is that if you have submitted your self-assessment tax return, or somebody has done that, an agent has done that on your behalf, and your CIS deductions were more than your liability, therefore you had had an overpayment and received a rebate, then you will not need to make a payment on account. And the reason for this is that the payments on account, which we've talked about in more detail in other videos, so we won't go through, into detail on the payments on account, but the actual payments are calculated based on the last submitted return and the liability that was due. So therefore, if you have submitted a return that shows that you had an overpayment and therefore were due a rebate, then your payments on account are going to be based on the assumption that the next year is going to be the same. And so therefore, if you had nothing to pay, there's nothing to base payments on account on, and it would assume that you wouldn't need to do them, make them for the next year. Now, if, say, for example, something's changed, perhaps your work has changed, your customer base has changed, and you have gone from predominantly working for contractors and then and therefore having the CIS tax deducted to working more for private individuals, meaning that you don't have that CIS tax deducted, then of course when you get to the end of that tax year you will have a liability and you won't have the CIS tax deductions to offset that, but that is fine. You won't be penalized because the payments on account, as I mentioned, are always based on the previous liability. So if you have no liability, there will be no payments on account. But in that scenario where your work has changed and you're no longer having so many deductions made because of your customer base, then although you won't need to make the payments on account, what you will need to bear in mind is that when you submit the tax return that shows the liability, that liability will be due the following January along with the payment on account for the next year. So therefore you won't have previously made any payments on account to offset that, so you will have a big big sort of cash flow impact in that January. Now, if you are always making provision for your liability as you incur it, then as we've talked about when we've talked about payments on account, it shouldn't be a problem for you because your first payment on account isn't due until 9 months into the tax year that that it relates to. So of course, if you are making provision on a, say, a monthly basis and working out how much tax liability you've incurred and tax and national insurance liability you've incurred, and you're putting that aside, then of course after 9 months you will have put 9 months worth of the liability away, but you've only got to make 6 months in the payment on account. So roughly speaking, if you're making provision for your liabilities as you're going along, that shouldn't be a problem, but it is important because not everybody does make provision or you know, is just not able, because of course if you have you know, sort of issues arise within your business, then of course you may use your provision rather than borrowing money that you would have to pay for. So you know, there are sometimes circumstances that mean you can't make that provision, or the important thing is that you know what liability that you've incurred. So hopefully that helps you to understand that if you have had a CIS rebate, all that means is that the deductions were higher than your liability, so you had no liability left to pay, and it's the liability left to pay that your payments on account are based on. So no, if you are in that scenario and you're receiving overpayments on a regular basis, then there won't be any payments on account due. Thank you very much for watching. Goodbye.